Welcome to Talking Real Estate with Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. We jump on here every Wednesday, kind of give you a rundown what's going on in the real estate market and any hot button items that we've heard over the last week. And I got a couple of them for you today. But yeah, so let's jump straight into it. And joining me today is Russ Williams with Williams Mortgage, who joins us about every week, unless we're in closings or meetings. And we got to, sometimes we do it at noon, 2, 10 a.m. So it's just, we're fluid in that regard. So we'll jump in, share our graphics with you and kind of give you a rundown of what's going on. So over the last 7 days, we've had 383 new listings go live. That's a little about 50 listings less than the previous week. New contracts written at 312 and happy new homeowners just about 298. So we're seeing the kind of similar numbers we've seen week over week. Contracts were down a little bit. I think obviously a little colder weather, kind of crummy. It rained for 4 days straight. Couldn't get its mind right. But yeah, so we're still seeing some good activity with regards to that. And so we'll take a look at a 30,000 foot view here of the Omaha and Lincoln MLS. So this pulls up here. So we got 1,935 active listings in the Omaha and Lincoln MLS. So breaking that down a little closer to home to the Douglas Sarpy County, kind of the Omaha metro area, just under 1,200, 1,163. Over that 300 mark for existing homes. So that's all price points, everybody. So that's all the way across the board. And I was just doing a search for a client that was looking right around 200, kind of in the Omaha metro area. And there were 10 houses that were basically up to 200,000. So the inventory, it depends on the price point that you're in. There's not much inventory out there and it's coming off and going on just as quick through that process. So then we had new construction, similar to about that 860, we kind of been hovering around that 850 to 900. Months of inventory went down from last week was, I think it was at 2.0, so down a little bit. Our average sold price went up $1,000 from the previous week up to 314. So as I mentioned last week, I had a listing go live last Friday. Basically that sucker was sold within the first, I think we're under contract in 11 hours. We had 17 showings on Friday. So it went live on the MLS about 10:30. I had 6 showings scheduled. By noon. In an hour and a half, I had 6 people that were running to get in there, set their time for later in the day. But 6 people that are, snapping their fingers, they're ready to go. And then we basically accepted a contract probably about 11 o'clock that night. And then, I canceled, I think it was 14 showings on Saturday that were going to be. So we ended up with multiple offers on that house. So that's the one thing, when we're actively in the market, as here at Champions Real Estate Team, our agents are constantly moving in the market. Last, I think in 2022, there was 62.3% of agents did 2 or fewer less deals. So that's the interesting thing, that in those multiple offers that I'm going through, you can kind of see it just being educated, what the number of offers that we see, by writing the offers, and then obviously the listing agents and seeing those offers come in of the agents that are experienced when they're writing those offers, to basically get their client a seat at the table. That's one of those things that we can coach you, we can educate you and move you through that process. Me being on the seller side, it was a $250,000 house, and there was some things, depending on if people wanted inspections, not inspections, appraisal gaps. That was one thing that Russ and I were talking on before we got here. When I worked with the appraisal gap, I basically called the buyer's agent, that says, I need proof of funds that your client, the buyer, can perform on this contract as it's written. So if they have a $5,000, $10,000, appraisal gap on top of their down payment, be that 5%, 10%, 20%, they need to have that 20%. So if you got a $200,000 house, for example, they got $40,000 if they're 20%, plus if they're doing another $10,000 of an appraisal gap, they need to have $50,000 that they basically can show you proof of funds that they can perform on that contract. And I think that's one of those things that sometimes agents, we get so excited of multiple offers, and the offers are higher than what the list price, and we're excited about it. Our sellers are all jazzed up. They're excited about it. They sign the contract. If you don't do your due diligence as an agent and take the emotion out of it and look at those contracts of what's written in that contract. And the other thing is, when they send you a proof of funds letter, make sure that it's not just in stocks and bonds and mutual funds, because that obviously can fluctuate. It can be high one week and come down the next week. And that money should be into a cash account or a savings account that seller can see, at least so they can make an educated decision and say, well, yeah, you had, $50,000 in the stock market, but I think today the market was down 500 points at one point. I don't know where it's at right now, but If all of a sudden now you got $30,000, you lost $20,000 in a week, which is very possible. The market goes up, goes down. You're not able to perform on that contract if that appraisal, would have come in low in that instance. So making sure that as a buyer's agent, if I have clients that are wanting to do appraisal gaps, I'm like, well, that's great. We can put it in the contract, but we got to make sure we can perform on what you're willing to do, and not going, oh, I hope it doesn't appraise. I hope it appraises so we don't have to worry about that. Well, we all know hope is not a strategy. So if you're in that hope thing, then we should not be writing that in the contract. So I guess that's kind of my tidbit of, the contracts I was working with last weekend and currently and things of that sort, so that you know exactly what you're getting into when you're entering a legal binding contract and making sure that you're able to perform on that, from a buyer's perspective, and then ultimately as a listing agent to make sure that buyer is able to perform on that contract. So we can only do what we can as best as we can. Obviously things happen. Sometimes, the buyer's not able to perform, in that regards, but we got to make sure, do our due diligence on the front end so that down the road, we don't get a speed bump in the road, if it comes to appraisal time and stuff like that. So, but, yeah.
That's great advice, Mark. I mean, when people put in unlimited appraisal gap, what does that even mean? That's why it's important to work with a team like Mark so they can do that due diligence for you to make sure that you as the seller are protected. That's a big deal.
Yeah. And that's the other thing is, and we see in I guess going on another route of a contract is you have an escalation clause. Some of those, sometimes they do unlimited. Well, okay, that's great. Well, then we want to see ultimately the pre-approval letter of up to whatever that agreed upon price is, and then if they're doing appraisal gap with that appraisal gap coverage up to that, say it's 250,000, goes from 200 to 250. Okay, we need 20% of that plus your $10,000. We want to see that. Maybe you have the appraisal gap coverage for the 200,000 at 20% down, but you don't have 250 and you don't have that extra. That $10,000 you may have now has to go towards your down payment. You don't have expendable, cash reserves to pay that appraisal gap, but you may be able to go from 20% down to 10% or 15%, and you're putting less down into the house, and you're covering that appraisal gap. Ultimately, now your payment's going to be higher because under that 20%, now you're getting mortgage insurance in there. So that may be an extra $100, a month in that regard. So there's a lot of different moving parts in that. And that's why, working with a lender with Russ that understands that and can give you those different options of, okay, here's 15% down. This is what your payment's going to be with mortgage insurance, and then, with an agent that can understand and make sure that we put you in the best, situation for you, to get that house. But then sometimes, it's just too rich for our blood. And it's one of those things that, hey, we need to walk away and take the emotions out of it. And that's exactly kind of what I do is my job is to not remain emotionless, but sit back, look at everything, because when you're buying and selling a house, emotions get involved, good, bad, or indifferent. But that's our job is to say, hey, is this something that makes sense to you, Mr. Buyer, Mr. Seller, to get that house? And there's a lot of different things in there that we want to coach you and educate you rather than us as agents. Oh, this is great. We're going to get a contract. I'm going to get a signed contract. I'm going to get a paycheck. This is awesome. Well, you're putting your client in a position that they're probably never going to refer you again if you didn't help them and help them make smart choices when they're going through that process, because there's many more houses out there that we can go get at many different price points, to make sure it's comfortable for you. And, and kind of the markets, we've been in this kind of similar market for the last, 4 years or so, give or take, and we've seen a lot of it, and good side, bad side. And, and we want to make sure it's best for our clients here. So, but anyways, I guess on that side note, I guess got to buy a house. We got to get some cash, get some money. So, but I guess how are the rates doing? I know we've had some other turbulence in the banking industry with the stuff going on out in the SVB, or the Silicon Valley Bank or whatever. So I don't know. Yeah. I guess we kind of talked on that before we got on, but I guess how are rates doing? How's things responding and all that kind of fun stuff? And
mortgage rates are down from last week. And just as we talked about, and you just mentioned, it's by and large due to instability in the financial markets. We had SVG, which is the 16th largest bank in the country, go through the second largest bank failure in U.S. history last Friday. And since then, a couple of other banks have struggled. I know Credit Suisse is struggling today. And there was a period of time, I know that some of the European markets even closed down trading on bank stocks because of concern over the plummeting value of bank stocks. typically what happens when we have concern, fear, if you will, in the financial marketplace, money leaves riskier investments like stocks, and it will go into either cash accounts or bonds. And that actually works to the benefit of mortgage rates, because as money goes into bonds, that extra demand will push bond prices higher, which brings bond yields down. That's what drives mortgage rates. So we've seen a little bit of improvement here. We are also seeing just yesterday, and the retail inflation numbers came in about where they thought they would, which is improving. And today, the wholesale inflation numbers came in significantly better than what they thought they would. So those things are helping to maybe let the Fed know that their efforts to raise short-term rates to stop inflation are effective. Certainly, if we have more bank failures or instability, or people, start to get nervous and do things that can be harmful to the economy, like what happened in California with Silicon Valley Bank, those things are wild cards that we really, that's a whole new arena. But provided that we see some calmness return to the markets, we are seeing some improvement in mortgage rates. The Fed next week will meet in their every 6 weeks, they meet in their open market committee meetings, and it's expected at this point that they'll raise short-term rates by 0.25% in their continued effort to bring inflation down, which again is they're looking backwards at the last 12 months at the data, and the data is improving. So all that to say, Mark, we've been talking about it for a while. We are seeing the top of the roller coaster, if you will, and mortgage rates, and we are on the downhill slope. All that to say that as interest rates drop, that brings more people off the sidelines, as you know, Mark, and that means we have more demand for a limited supply of homes out there. So home prices, you mentioned last Friday you had lots and lots of offers coming in a home, lots of showings on a home. We can probably expect more of that, especially at the affordable price points. And so this is the time, folks, to get in if you want to buy. Again, marry the house, date the rate. If we're not at the bottom of the rate cycle, we can fix that later on for you. But this is a great time to get in. And all those folks that are saying housing bubble, crash, valuations drop, I think they're on crack. I think they're nuts. If we look back all the way from 1941 moving forward, Mark, what appreciation rates have done countrywide, we have had 73 years of home price appreciation, 7 years of depreciation at small levels, and 1 year where it was even. Valuations at the beginning and into the year were the same. So if you're betting on a fighter, you're going to bet on that fighter every day of the week. So those folks that are screaming bubble, valuations drop, we don't have anything right now that would suggest there's anything remotely accurate to that. So obviously we can't guarantee it, but 73, 7-1 is a pretty darn good track record, Mark.
Yeah. Well, I think, on the listing that I shared, on Facebook, I had somebody comment, which I always get the people that have the funny comments of, why would anyone, kind of the test of why would anyone want to wait for the crash? And I'm like, like we've talked in weeks prior, it's just a supply and demand thing. We just don't have the supply of houses to
Simple
keep up
math.
with demand. And then it came down to, we've talked about numbers before, and the generations, and, how many houses that we need, and the baby, the millennials and things of that sort, the number of them that we've had, so I just don't think that there's much room to that, validity. I mean, ultimately, like you said, there's other things that can happen, but it's one of those that if you're looking at what's going on in the financial environment, and you're looking for a safe investment that you can touch, feel, and see, real estate's that. I mean, for all intents and purposes, if you buy a rental house, you can go drive by it, you can see it. You don't have to worry about if the government's going to insure it with the FDIC loan, the insurance on that and what's in your bank, but if you have an asset there, that's what, tangible asset that you can see, hold on to. So that's, if anybody's thinking about moving money, I know in 2008, we did see a lot of people move out of the stock market. And now when that market declined, the housing market declined, you saw a lot of people come out of the stock markets and buying real estate. And they look like they're the smartest people in the world right now, with houses that they bought back then, if they've kept them for that long, so.
There've only been two periods between 1941 and present where we've seen home values year over year go down. Now, granted, in 2007, when we saw the Great Recession, that was one period. The other period was in 1990, and that was just a 2-year period. So every other year they've gone up. And take a look at January 1 of 2022 to present. What's the S&P done? It's down over 30%. We've never had real estate down that far. Only 1 year in the last 82 years have we seen more than 10% drop in real estate values. And that was in 2008, following the housing bubble, where we had way too many homes available, and we took shut off the faucet of financing. So real estate's a great investment. I'll argue with anybody on that.
Yeah. So awesome. Well, I feel like we've kind of went a little longer than we normally have, but I think this is a lot of great information. And
Good stuff.
like you and I, we could sit here and talk about it all day, but so we want to try to keep these videos a little shorter. So, but if you have questions or you want to talk about it or have comments, we love to chat with you. Give me a holler, 402-672-7600, or give Russ a holler, 290-8936. We'd happy to chat with you, go over your options, whether you're thinking of buying a house, in the next 3 weeks, 6 months, a year and a half out. If you're thinking about, real estate as an investment, give me a holler. I got real estate investments, that I can kind of tell you how I did it. What's the path to do that and the pros and the cons. I mean, there are some good things and some bad things that come along with owning real estate, but over the long haul, tends to work itself out. So, but I appreciate everyone jumping in, listen to us, and like, subscribe, all that kind of fun stuff on the social media, and I'm happy to help. So take care, and see everybody next week.